It hurts to pay taxes, right? Have you been searching for ways through which you can save your taxes? Watch our 3-part series to know all the ways through which you can save your taxes legally. In part 1, we'll be talking about saving taxes through savings and investments. In part 2, we'll talk about saving taxes through loans and house rent. And in part 3, we'll talk about saving taxes through insurances and donations. So stay tuned. And before moving forward, do subscribe to the Lxme channel for more such informative content. Hi, I'm Priya from Lxme, and today I'm going to take you through all the ways through which you can save your taxes through savings and investments. So let's get started. Section 80C is one of the most popular and well-known sections amongst the taxpayers since it allows them to reduce their taxable income by either making tax-saving investments or incurring eligible expenditures. This section allows a maximum reduction of up to 1.5 lakhs every year from an investor's total taxable income. Now talking about who can claim this deduction. So individual taxpayers and Hindu undivided families are eligible to claim this deduction. Talking about corporate bodies, partnership firms and other businesses are not qualified to get this deduction. As we discussed, that 80C will allow deductions either by making tax-saving investments or by incurring eligible expenditures. So let's first go through the investment options that we have under Section 80C. First in line we have is EPF, which is the Employee Provident Fund. EPF stands for Employee Provident Fund, and it's a government-backed retirement scheme which every employee can avail from their employer. Both the employee as well as the employer contributes towards this scheme. It comes with a lock-in period of 5 years and there's the vesting period of 55 years. So you know what? You must be thinking, what is vesting period? So vesting time is the time from which your pension begins. Hope that makes it clear. Currently, the rate of interest offered on EPF is 8.50% per annum. And you know what? While the contributions made by the employer are tax exempted, the contributions made by the employee towards EPF are available for tax reduction under Section 80C of the Income Tax Act. Now moving forward, next in line we have PPF, which is the Public Provident Fund. It's a government-backed long-term investment scheme that comes with a maturity period of 15 years. Currently, the rate of interest offered on PPF is 7.10% per annum. The amount you contribute under PPF is eligible for tax deductions under Section 80C of the Income Tax Act. Let's talk about NPS, that is the National Pension Scheme. It's a pension cum investment scheme launched by the Government of India to provide security to the citizens of India. So you can open two types of account under NPS, that is Tier 1 and Tier 2 account. The returns on this instrument depends upon the fund's performance, as it's a market-linked instrument, and secondly upon the asset allocation that has been selected by the subscriber of NPS. But remember, to avail the deductions of NPS under Section 80C of the Income Tax Act, your Tier 1 investments will only be eligible for that purpose. Next investment scheme is Sukanya Samriddhi Yojana, or we call it as SSY. It's also a government-backed scheme launched only for the girl child under the campaign Beti Bachao Beti Padhao campaign, with an objective to provide financial support to the girl child for her education and later her marriage. Talking about the lock-in period of this scheme, so this Sukanya Samriddhi Yojana comes with a lock-in period of 18 years and the maturity period is of 21 years. The returns available on Sukanya Samriddhi Yojana is 7.6% per annum, and these rates are revised by the government every year. You can avail tax deductions of up to 1.5 lakhs of investments made under this scheme. Next instrument that can help you save taxes under Section 80C is the National Savings Certificate. National Savings Certificates are government-backed schemes that comes with a maturity period of 5 years. It is one of the most popular tax-saving instruments among the low-risk appetite investors or the risk-averse investors. It offers an interest rate of 6.8% per annum compounded annually. The deposits made under National Savings Certificate qualify for tax deduction under Section 80C of the Income Tax Act. Now the next scheme is the Senior Citizen Savings Scheme. So this is also a government-backed retirement scheme and it comes with a maturity period of 5 years. It is offered by all the post offices and banks in the country. The interest rate offered by this scheme is 7.40% per annum, payable quarterly. The investments made under this scheme are eligible for tax deductions under Section 80C of the Income Tax Act. However, the returns that you generate are taxable as per the tax slab applicable. Next instrument that we have is ELSS, or we call it as Equity Linked Savings Scheme. It is a market linked instrument and falls under the category of 80C's eligible investment option. These investment schemes comes with a mandatory lock-in of 3 years. So you need to keep this 3-year lock-in period in mind before making an investing decision. ELSS funds are those funds that invest their money in equity or equity related instruments. By the way, do you want to invest in expert-backed ELSS funds? Download the Lxme app to check out the tax-saving portfolio that Lxme offers, and to top it up, we have the Lxme tax calculator to make your tax planning super easy. Another instrument that we have is tax-saving FD. These tax-saving FDs are offered by both banks and post offices, and it allows a deduction of 1.5 lakhs under Section 80C. Next instrument is the infrastructure bonds. Infrastructure bonds are not issued by the government but are issued by the infrastructure companies. So if you are investing in these bonds, then you can claim a maximum deduction of 1.5 lakhs under this section. The next instrument that we have is NABARD Rural Bonds. NABARD stands for National Bank for Agriculture and Rural Development. Rural bonds offered by NABARD are eligible for tax deductions under Section 80C of the Income Tax Act. Now let's talk about the eligible expenditures that you can incur to get tax deductions under Section 80C of the Income Tax Act. So the first in line is the life insurance premium that is paid by you. So if you have purchased life insurance policy for yourself, your spouse or your kids, then the premiums that you pay towards these policies can be claimed as a deduction under Section 80C of the Income Tax Act. In case you have multiple insurance policies from different insurance providers, then you can club all those premiums and claim this deduction under Section 80C. But remember, the maximum limit is 1.5 lakhs. Next is the tuition fees for 2 children. So remember, this deduction is available for tuition fees only for 2 kids. So any tuition fees that you paid for any university, college or school, then a tax deduction can be availed for 2 children under this section. The next 2 expenditures that we have is the principal repayment of your home loan and registration and stamp duty charges that you pay to purchase a home or a property. So we'll discuss about these 2 things in the next part of the video, so stay tuned for it. And just by the way, remember, all the instruments that we discussed are allowed for a tax deduction, but the maximum amount that you can claim is 1.5 lakhs. So either you can claim it on a single instrument or combine them all. The choice is yours. Now let's talk about another tax deduction, which is Section 80CCD 1B. Remember we talked about NPS a while ago? So this tax deduction is related to NPS only. Under this section, an additional deduction of Rs 50,000 can be availed for contributions made towards NPS Tier 1 account. Remember, it's Tier 1 and not Tier 2. Tier 2 accounts are not eligible for deduction under this section. Now you must be thinking, who can avail this deduction? So this deduction can be availed by salaried individuals as well as self-employed individuals. One more thing that you need to keep in mind here is, if you are also investing in Atal Pension Yojana, then the contributions made towards that scheme also is eligible for a deduction under Section 80CCD 1B of the Income Tax Act. Now let's look at the other section, that is Section 80CCD 2. So this is related to the employer's contribution towards NPS. So if your employer is contributing towards your NPS account, then you can claim tax deduction. But one thing here is, only salaried individuals can claim this deduction and it's not for the self-employed. So the government employees can claim a maximum of 14% of their salary as a deduction under this section. Meanwhile, for the private sector employees, the limit is capped at 10% of their salary. Section 80TTA of the Income Tax Act provide deduction for the interest income on your savings bank accounts. And one thing to keep in mind is that this deduction is available only for the interest income on savings account and not for fixed deposits or recurring deposits or any other investments. So Talking about the maximum deduction, you can claim a maximum of up to 10,000 rupees as an income tax deduction under the Section 80TTA. You can claim this deduction on any number of savings account as long as the total sums up to 10,000 rupees. This tax deduction is allowed only to individuals and Hindu undivided families. Now moving on to the next section, that is Section 80TTB. So Section 80TTB allows tax deduction on the interest income on savings account deposits, fixed deposits, term deposits or recurring deposits. The maximum amount that you can claim as a deduction under this section is Rs 50,000. Now you must be thinking, who is eligible to claim this amount? It is allowed to a taxpayer who is a resident senior citizen aged 60 years and above can avail this deduction from his or her total taxable income. Now wasn't that easy? Tell us in the comment section below which are the instruments that you use to save your taxes. And that's a wrap, ladies. But one thing I would like all of you to keep a note on is you will avail tax benefits if you are investing in any of the above mentioned scheme. But remember, your goal shouldn't be just saving taxes. You should carefully plan all your investments so that you are saving taxes as well as earning returns on it. Stay tuned for the part 2 and 3 of this series to know about the other tax saving instruments. So that's it from me. If you'd like to know more about tax saving tools or you'd like me to cover any other financial topics or instruments, do let me know in the comment section below. And to get started on your investment journey, download the Lxme app, and to get more such informational content, subscribe to the Lxme channel.